morning. You're watching the market right here in 18 now with me, Aisha Faridi, Shrishti Sharma, Sajjeet Mangat as well joining in on the show. And guys, Trump is at it again. October 1st and all branded and patented pharmaceutical imported into the US will face a 100% tariff unless the drug maker is actively building a manufacturing plant on American soil. In fact, the American president also posted on Truth Social that breaking ground or under construction will be threshold to avoid tariffs. The White House frames it as a bid to boost domestic drug production and reduce reliance on foreign supply chains as well. And yes, I believe that the shake-off will be felt on Indian pharma, though largely generic, but there could be few cases like a Sun Pharma, perhaps.
Yeah, I mean, I think generic way may not be impacted much because he hasn't said anything on the generic.
It won't be.
It won't be there. It's only the branded ones, which I think Sun Pharma has one or two drugs, which will be impacted because of this. And it was widely expected that branded as well as patented will be the first to go, because he has been at it from a point of view that pricing of drugs in US has been much more expensive as compared to the same patent innovators pricing it in European markets or Asian markets, and that's something which he's been talking about it, that the prices have to come down, and I think it's not coming down, and that's why he's trying to impose those kind of restrictions so that it can be manufactured on the US soil. So yeah, from an Indian farmer perspective, it also sets a little bit of a negative framework for the pharmaceutical sector, because you still don't have the section 232 investigation report out. So when that comes into picture, there will be some kind of impact that can happen on the generics at that point in time, because section 232, what it does is that it assesses the impact of pricing of drugs in the US market, so compared to US peers, and if the US finds that it's like a dumping of low cost medicines into the generics into the market, then they will start putting some kind of tariff so that it's at par with it gets the pricing get regulated. But it's a bad thing for the US consumer, because at the end of the day, it's not the Indian companies who are going to pay for it, it's the US consumer who's going to pay for it. And that's where the Trump impact on the inflation comes into play, and that's where Powell holds ground, saying that if tariffs are going to be pushed through and the impact will happen on the consumers with respect to pricing, then inflation will inch up, and if inflation inches up, it doesn't give much room to Powell to cut more rates. So so from that point of view, it is there. So Trump is at it saying that you need to get things back on the US soil, but at the same time there is a repercussion, and the Fed now believes that it could be a short-term or a transitory impact of inflation, but even that given the fact that the US economy is slowing from a labor point of view, and this inflation coming in, it's going to create some kind of issue for Powell to push through any further rate cut. That's why he was very hawkish in his last rate cut, saying that it's a risk management cut which we are doing, and not a dovish commentary that came through.
Indeed, that's what transpiring in the US. But with respect to tariff, that's not it, because fresh tariff has been announced for truck manufacturers and home furnishing players as well. And in more posts, Trump has announced that he's imposing 25% tariffs on all heavy trucks to protect domestic players, and 50% tariffs on kitchen cabinets, bathroom vanities and associated products to stop the flooding of such products and secure their own manufacturing. But Sajid, seems like that some of these Indian players might get impacted too on the back of that.
It's a little bit of impact from a auto component makers point of view. That's going to happen, because we don't manufacture trucks and sell heavy trucks in the US. It's basically some of our companies like Bharat Forge or Forging, which does some kind of components or auto ancillaries for Class 8 trucks, which are heavy trucks in the US there. So that's from that point of view, yes, it's going to be some kind of impact. If there is a imposition of this tariff and there's a hit on sales, then the indirect impact comes into some of the Indian companies. But Indian companies directly give, send the product to the US, and this is for anything which is imported. So basically, you're talking about imports, Indian exports going to the European market. From there, it gets exported to the US there or any other market. market through which either it could be Canada, it could be Mexico, anyway. Those areas, those are the countries which may be having an import impact, as a result of which an indirect impact may come for some of the auto ancillary companies.
Oh yeah, absolutely. So look out for what Bharat Forge does. Like Sajid just highlighted, they do provide components to the Class 8 trucks in the US, and that's definitely one stock that you need to keep on your radar. But I just want to see what the global setup as well is looking like, and just very quickly, it seems like all a sea of red. At least Asian screen seems to be shouting out loud. Both Shanghai as well as Hong Kong, the key markets, they're in the red as we speak right now. In fact, the handover from the US equity markets as well was weak overnight, about almost 200-point knock off for the Dow, and the S&P as well as the Nasdaq as well knocked down about almost 0.5%. And it's no different for our markets as well. Finally, you took a decisive breakdown after being in a range for so long. It was a 150-point slide, no less, for the Nifty futures, and we did breach some key levels. Not just 25,000 got taken out, but we also breached that 24,900 print as well. And I wonder what the F&O data, Sajid, and you clearly look into that. I wonder what's that indicating. Seems like some more down days, because today you will have an accelerated move perhaps from Pharma, for instance.
True, but from a Nifty point of view, yesterday what we saw was some kind of rollovers beginning to happen, because now things are not happening on rollover -1, it's happening marginal rollover -2 or 3 days. So we've seen the Nifty rollover nearly 35% happening. But at the same time, normally what a rollover happens is that you close a position in the current month and then go to the next month and buy a position. What we have seen is that positions getting added in the next month, but the closeout of positions are yet to happen. So that will happen over the next 2 days, and that's what we are seeing here as well. The put call ratios have fallen to 0.67. That's primarily because a lot of call writing has happened at 24,900 and 25,000 and 25,100. So yesterday we spoke about the fact that it's a downward bias for the Nifty, and that's what we saw, it going all the way below 24,900, and we have now support coming at 24,800. But today's macroeconomic events or global geopolitical events, I would rather say, is something which needs to be watched out for, how the sentiment can turn negative, and people will be cautious. You will see some kind of closures of positions happening today, and not taking it over the weekend, because this Trump announcement in the morning brings in that kind of uncertainty for the markets, especially for anyone who's trading and keeping for the trading for the expiry, which is on Tuesday for the Nifty there. So from that point of view, yes, the Nifty rollover 35%. What was interesting yesterday is at 3 p.m. yesterday we saw a lot of selling happening in Nifty Bank index, and that happened because a lot of selling in the private banks, especially if you look at the delivery statistics. HDFC Bank, ICICI Bank, Bajaj Finance, these are some of the stocks where we saw huge delivery happening yesterday, and that's one of the reasons why Nifty suddenly saw a fall, because it was led entirely by Nifty Bank yesterday. And Nifty Bank, we are not seeing much of a help there. We have seen a good amount of shorts getting added. 354 crores of net shorts have added in Nifty Bank futures, while it was a flat kind of net addition for Nifty futures there. So in one day alone, we saw yesterday 1,400 crores of open interest position getting added for FI Nifty Bank futures. So that gives you an indication of kind of short position getting built there. At the same time, for index, the long positions are still holding on at 15% which is there.
Yeah, absolutely. And you could see that in the way the market declined, given the weightage, and it's the maximum weightage that financials have on the index, it was bound to pan out this way. I mean, look at the names. ICICI Bank, it's so unfortunate that PSBs had all of a 3-day rally, and that also got stalled yesterday. SBI, for instance, was also an underperformer. Similar was the case with the likes of a Kotak Bank, IndusInd, etc. They were all laggards in trade. It was only Axis which was the solo outperformer from within the banking pack. But today is not just going to be about pharma. Perhaps it's going to be about IT as well. While it's not really an apple-to-apple comparison, but Accenture came out with its numbers and interesting observations there. I was just looking at the revenue and bookings while they're growing, but it's at a much slower pace than the previous years. The operating margins are under pressure. The focus on a generative AI, of course, the bookings there are quite notable. That, of course, is the positive one and positive future growth driver, also as per most brokerages as well as the management themselves. The guidance, that's the clincher here, because the guidance for FY26 is much more conservative, and that is clearly highlighting there could be potential macro or at least client-specific headwinds that they do foresee. And yeah, the revenue growth guidance, Ajit, at 2 to 5% in local currency terms. This versus what they set out in FY25, which is 6 to 7%. So that's the notable decline.
So, yes, there is an increase in revenue base which is there, and from that you have 2 to 5% which is coming in. But if you, and that's because you're factoring in the federal orders which is there, because they're going to lose some of the federal orders there. If you don't, if you include them, it's around 3 to 6% which comes into play. But what is more important for me is one, you're talking about discretionary spends. That lower end of the guidance talks about comes into play when discretionary spends are much lower. The upper end comes into play if discretionary spends are is okay, or it's growing. Accenture has been able to deliver the revenue guidance despite a headwind which is there in the US, especially in the North American and the BFSI space. The growth of revenue is much better, which augurs well for the Indian IT companies, because more than 50% of our revenues come from the North American geography, and BFSI being the biggest segment for many of the Indian companies there. So that's one thing. Discretionary spend, they see no change in discretionary spend as of now. While Indian companies have been talking about muted discretionary spend, and even if the orders are coming in, it's getting deferred, or order starts have been deferred there. That's something which we need to watch out for. And from an overall perspective, Accenture is also talking about the guidance from a point of view of the order book which it has for artificial intelligence or AI, and that is also spurring the entire the guidance for Accenture. And Indian companies so far don't have that kind of order book with respect to AI led guidance. So that's something which is there. From a Nifty IT, Aisha, if you look at the price to earnings, 22 times forward earnings for Nifty IT, it's still a premium to Nifty by 10%. So that's something which is going to be a case. We have seen Nifty IT underperforming the index by 25% in this calendar year itself. So that is also plays out. Now the question is whether this 25% underperformance or fall in Nifty over the last 1 year is it the base for the IT companies, or is it going to be further fall from here? My answer is that it could be that we're going to see some more pain in IT companies, especially before it gets better, and that's especially because we have in the next 10-15 days at least 2-3 IT earnings coming in. TCS coming on the 9th. It's a big boy of IT companies, and their commentary will set the tone out for with respect to what they see, how the entire thing is flowing.
And it's unfortunate that there is no visibility for them to give any sort of commentary on things.
Yeah, I mean for the last 2 quarters,
nothing has changed in the last quarter.
And for the last 2 quarters, what the TCS management has been saying that they're trying to speak to the clients. The clients are signing the orders, but they're not allowing them to start the orders. So they want more visibility with respect to regulatory framework and the Trump tariff, how it's going to play out over the period there. So that's something which is there. You're going to see a decent kind of order book coming in from TCS. The question is how quickly they're able to convert that order book or execute that order book into billings. That's something which is going to be. So headwinds is AI disruption for them, GCC trends, and H1B which came in much of late, which is there. So these 3 commentaries are something which we're going to watch from all the IT companies. And one thing is certain, that the net addition in manpower is going to come down for many of them, like what we saw for Accenture, because they saw a drop of 1% of their manpower. something similar which is going to be seen here for many of the IT companies.
Oh yeah, absolutely. But let's take the conversation forward.